Thanks for hanging around with us here on the Ric Edelman Show. It is The Truth About Money, and we're doing a special broadcast today from the Bellagio Hotel in Las Vegas. You can call us whenever you want, 888-PLAN-RIC, or visit us online at ricedelman.com. Barron's is here hosting its annual conference of some of the top financial advisors in the country and their teams. And we've been interviewing a series of advisors from around the country. And our final couple of guests, I'm happy to welcome Dave Armstrong of Monument Wealth Management and Bob Fragasso of Fragasso Financial Advisors. Dave, you're in Alexandria, Virginia. Bob, you're in Pittsburg, PA. Welcome, gentlemen, to the Ric Edelman Show. How are you?
I'm great,
Fine.
thank you.
Thank you, Rick.
So you've been hearing the other interviews we've done with other advisors here on the program today. We've talked about Donald Trump and the impact of the new administration. We've talked about the fact that we're in an 8-year bull market that's getting old and the Dow hitting 20,000, an all-time high, uncertainty due to the Department of Labor's fiduciary rule and not knowing whether the Trump administration will repeal it or delay it or modify it in some way or let it go through as planned on April 10th. We've talked about the surprises that financial advisors have for their clients in terms of what they should be focusing on and what matters and things like that. So I'm going to give you two guys the microphone here for you to tell me what is it that you wish I would ask you here on the program. Start with you, Dave Armstrong of Monument Wealth Management.
Well, I think it would be an interesting thing to talk about how people are viewing some of the changes that have been taking place in politics and in the market that you just mentioned. And how it really relates to them as investors. And I'm a proponent of people having a financial plan, a long-term investment strategy. So I really don't think that the short-term events that have been taking place, nor the crossing of Dow 20,000 should really be impacting people's decision-making process right now.
But are you getting that commentary from people? Are they paying too much attention to the markets and the Dow than you feel they should?
I feel like I'm seeing a lot more of it in the press than I am from my actual clients. My clients view crossing Dow 20,000 as no more of a milestone than, say, crossing the North Carolina-South Carolina state border on a trip from D.C. to Miami. It's certainly notable, but it really doesn't provide any sort of meaningful benchmark on how well you are progressing on your travel south.
So if you had a client say to you that they heard some other advisor recommending portfolio changes as a result of the Dow 20,000, your response would be what?
My response would be that it's impossible to have any sort of facts about the future, and anybody that is trying to provide any sort of insight into what's going to happen next is simply giving their opinion. And opinions are fine, and they can be entertaining, and they're not without merit, but because there's no way of looking at the future and really drawing any factual evidence from anything, I don't think anybody's investment strategy should really change just because we hit a major milestone.
In other words, your crystal ball stinks. You're not even going to play the game.
I think all of our crystal balls stink, except for the crystal ball that says that people who have a well-diversified portfolio and have a long-term investment strategy, that crystal ball will tell you that people have a very high probability of meeting the goals and objectives of their plan.
Of course, you're not saying that diversification guarantees any level of success. And the reason I cite this is that there are an awful lot of folks that we see, I'm sure you see them too, on the internet and emails, on late-night TV, ridiculous mail pitches you get at home of folks saying, the market's about to tank, the dollar's about to be destroyed, the U.S. government's going to collapse, therefore buy gold, or therefore buy whatever it is they're pitching you to buy, whether it's some options trading software or some Armageddon strategy. People exploiting the fears that folks have as a result of this. What's your response to all that?
My response to that is, and you're right, you can't turn on any XM satellite channel without hearing all the commercials on gold and playing on people's fears. But I think you could go back and look at what were the news cycles at every time the Dow crossed a 1,000-point threshold and say, geez, could you have looked at the news and found every reason in the world to sell your portfolio at that time? And you could probably dig something out of the news that could have been fearful at the time, but none of those things have really stopped over the long term.
So ignore all that.
I think the long-term investor should ignore all of that. If you're a trader and you trade for a living every single day, maybe those things are important to you every single day. But for general investors who have a well-thought-out financial plan, investment strategy, these things shouldn't be taken into account on a day-to-day or even a quarter-to-quarter basis.
So that was Dave Armstrong and the question he wanted me to ask him. And Bob Fragasso of Pittsburg, PA, you're a financial advisor. What question do you want me to pose to you?
I think it would be interesting to ask me where the investor is going with this tumultuous change that's occurring in our industry.
What tumultuous change is occurring in our industry?
Well, there's quite a bit. First would be regulatory spawned, and second would be the secular movement in the various segments of our industry, the large national wirehouses versus the move toward independence, the independent advisor versus, and we have to go back, and this will be quick, to 1975 when commissions became unfixed.
You know, people are unfamiliar with that fact. We refer to it as May Day.
May Day, May Day.
When stock commissions were deregulated, people don't realize that prior to May 1st of 1975, when you bought a stock, didn't matter who you bought it from, every firm charged the same commissions. And along came May 1, it was deregulated, and that's how Charles Schwab created the first discount brokerage firm, creating consumer choice for the very first time and forcing firms to alter their value proposition. In addition to May Day creating discount brokerage firms, it led to the emergence of the financial planning profession.
It did, and the certified financial planner designation, not a coincidence, came out of that chaos that occurred after. But take that to where we have come and how we've come, and that is the movement away from a locked-down, non-flexible system that occurred before into a multitude of ways that clients can access financial advice and guidance or simply trade on their own. And that's very confusing to investors today.
You know, it's no longer about investments. It's no longer about investment prices. It's now about the investment advice and the breadth of services you need. Going back, Dave, to your comment, it's about the financial planning process, achieving the goal of the client. And so it's really an important element for consumers to recognize this fact and to basically step back and say, what is it I'm trying to accomplish? What are the services that I need? Let me shop around the way I would for a washing machine and interview several advisors and find the one who is going to be able to deliver for me the services and the advice that I need for myself and my family.
Exactly correct. And I would add that when the right entity or team is selected, it should be done in a context of holistic planning, because your portfolio is not necessarily the right portfolio for Dave or for me or vice versa. But rather it's in the context, as you said, of where am I trying to go? What's my risk tolerance level? What's my time frame? What's my tax bracket? What are my family responsibilities? Then we fashion the right model for a portfolio and then go manage for that model. And it's different for each one of us. And that's where the industry is moving, in my opinion.
Yeah, I think that both investors and advisors always need to be addressing the question, what's the money for? And without that, without that question being answered, it's really impossible to create a great investment strategy for anybody.
Terrific information. That's Dave Armstrong of Monument Wealth Management in Alexandria, Virginia, and Bob Fragasso of Fragasso Financial Advisors in Pittsburg, PA. Gentlemen, thanks very much for joining me on the program today.
Thank you, Rick.
Thank you, Rick.